Well, we're just about at 1:30. I know that we have a big group joining us today, but I think we'll just let people in as they show up. My name is Jessica Rorson, and I'm working with the Indigenous Business Development Services and Sage Hill Community Futures. Before we get started, I just want to read a land acknowledgement. So as we gather here today, we acknowledge that we are on Treaty 6 territory and homeland of the Métis. We pay our respects to the First Nations and Métis ancestors of this place and reaffirm our relationship with one another. So thanks again for joining. If you're new here, we have been offering a series of virtual training for the last, Jenny, 4 years.
I think that's what it is. This is incredible.
Crazy. And I mean, we now have like 92 videos on our YouTube channel that are all at a grassroots level for small business owners. Today, we're thankful we have Trevor King with Prairie Paget out of Rostern. I'm also in Rostern. We probably could see each other if I actually was not in my basement. Anyways, but thanks everyone for joining us. And now Jenny is just going to do a little welcome from Sage Hill.
Good afternoon, everyone. I'm Jenny Glessman, and I'm with the Sage Hill Community Futures Office and the IBDS, Indigenous Business Development Services. We hold that contract for across the province. So we offer loans, advice, and support, the Sage Hill, within our Sage Hill region, and then the IBDS we do across the province, offering advice and support to small business, Indigenous business owners in the province. So we'd like to welcome everyone. We look forward to these sessions. We hold these twice a month on different topics. And today we thought we were going to delve into incorporating or not. I would bet it's one of the biggest questions that we get in the office from small business owners, not sure if they should or shouldn't, or when they should. So we've got the expert here today who's going to give us some great advice on should, shouldn't, or maybe we should. So I'm going to turn it over to Trevor.
Thanks, Jenny. So can I share my screen, Jessica?
You should.
Okay, yep. So everyone can should see the screen now, not me, right? As much as I'm...
Right, we can see your screen.
We can see your screen, just not yet in
presentation mode. It's got all the little boxes still. There we go.
Thank you, Jenny.
Okay.
Didn't know what to call it.
I know.
All the little box. How can I remove that? Okay, well, now I've lost you guys.
Oh.
It's all good. Right. We can see you.
Okay. Yep. Well, I'm going to talk. So thanks for the wonderful introduction. Like they said, my name is Trevor King. I'm the senior partner here for Prairie Paget Tax and Accounting in Rostern. This is one of several webinars that I do with the IBDS, and really the first time we've delivered this one. So
yes,
how we're going to do it, I'm going to do some introductions, if you guys wouldn't mind. So where are you located? How long have you been in business, and what industry are you in case you have any specific questions, right? So I'll go first. Located in Rostern. I'm in accounting and business advisory, and we've been in this current configuration for 5 years. Do we have any one of our participants that would like to share?
If anyone would like to unmute and share their information, that would be awesome.
Can you all hear me?
We sure can.
Perfect. So my name is Deborah Gatton. I'm located here in Saskatoon, originally from Prince Albert. I've been in business now with the food truck for 3 food truck seasons. So we opened in 2022 for May. And then I also have the cafe business, which is located on 3rd Avenue. And that one's called Cafe Del Rey. And we've been in operations for 1 year now. On October 2nd will be our anniversary. So both within the industry of food and hospitality, specifically food, I guess, more than the hospitality aspect. But yeah, so been a chef for about 12 years and passionate about the food side of things. And that's kind of what got me into creating my own food businesses.
That's awesome.
Yeah, thank you.
We do have one in the chat. It says, I'm super sick, but I'm from Saskatoon area, originally from La Ronge, been in operating for close to 1 year. Oh, it's a truck hauling business. So that's Ashley. Thank you, Ashley.
Okay.
Hi there, can you hear me?
We sure can.
Hi, my name's Angie. I am in a remote location south of Outlook, and I do consulting for small business owners, primarily female entrepreneurs, and I've been doing this for 2 years.
Awesome. Thank you for sharing. Is there anybody else? I think everybody else is quiet, so they're just going to listen.
Okay. Okay, no, that's fine. I mean, it's a lot to share your business and how long you've been in it and where you're from. I do appreciate everyone. If you have any questions throughout it, either type them in the chat, or honestly, you can just unmute and ask it as we're going through. I'm happy to answer all your questions.
I guess I could share too. I wear two hats. I work at Sage Hill, but my husband and I own Bruner Lumber Supply. We've been in business as of yesterday 9 years, and we are incorporated. We bought it that way. So there's another one. And I guess Jessica can share too.
Yeah, I have two businesses. One is called Métis Roots Outsourcing, and that one is incorporated. And then just first season of the Wiener Wagon, that one is a partnership with my husband, and I did incorporate, and I don't regret it.
So now we'll turn it over to Trevor.
Okay. So what exactly is a corporation? We kind of need to, we'll start at the beginning and then we'll work our way through the steps to get there. So incorporation, what is it? Why should you incorporate? When do you incorporate? What changes when you move to a corporate structure? And then as well as common mistakes, shares, and dividends. I put that in at the end because there's typically a lot of discussion around how do I structure this? What are share classes? What is a pref share versus a common share? What does all of this mean in very plain English? So we'll start at the beginning. What is a corporation? Corporation basically is a legal entity that's separate and distinct from its owners. You have to think of it like it's another person, right? So it can enter into contracts, it can incur debt, it can own property, it can sue and be sued. It would be registered with the CRA as well as with the government of Saskatchewan if you're required to remit PST. You essentially, when you move to a corporate structure, you become a shareholder, right? So not only are you an investor in the corporation, but either you're an employee or you're an owner operator. And when you, and this is especially important with established businesses, when you move from a sole proprietorship or a partnership to a corporation, you have to get new GST and PST numbers. You can't use your previous one because that is tied to you personally. The new one needs to be tied to the corporation. So all of this means corporation is just a collection of files in an accountant's or a lawyer's filing cabinet. That's all it is. It's a collection of documents typically associated with a minute book. Think of it like a person, although it's more like a file folder. That's all corporations are, a group of documents together in a filing cabinet. So why would you move to a corporate structure? Does anyone have any thoughts as to why you would move to a corporate structure?
There's lots more benefits with regards to the government and tax breaks.
Okay, so tax breaks from the government.
Protecting yourself for liability.
Yep, that's another big one.
Being able to participate in government projects and submit proposals.
Yes, sometimes you need to be incorporated to do that. Typically, they'll want you to at least have a business number associated with that, but having a corporation as well. So government contracts. All right. So here's the reasons that I typically use when I discuss with my clients. Okay, it's time for you to incorporate. This is usually liability reasons. So when you're in an industry, let's go with the food industry, right? Cafe Del Rey. If you were to be sued by a patron, all of your personal assets would be up for grabs, as well as all the business assets. And within a corporate structure, the litigation is typically limited to just the assets held within the corporation, right? So they can't take your personal residence, essentially. I highly recommend anyone who does contracting, especially if you're dealing with our friends south of the border, if you have American clients. That was some advice we got many, many years ago from a litigation lawyer who said, "Oh, you're working with American clients?" "Yep." "Oh, have you been sued yet?" "No." "Well, it's not a question of, whether or not it's going to happen. It's a question of when," was the advice we received. And thankfully, knock on wood, we haven't been sued yet. Other reasons to incorporate, you get what's called lasting existence. So I know it's a strange thing to think of, but when people start estate planning and they think of their family legacy, with a sole proprietorship or a partnership, when the founding partners pass away, that's the end of the business. Versus with a corporate structure, the corporation continues to exist as long as it is not wound up and dissolved, continues to exist long after the founder has passed away. The tax savings associated with a corporation, as we mentioned, there is a significant tax savings. That being said, there are a little more stringent rules around how that works.
Have you tried restarting the computer and seeing if it does it after a restart?
No, I haven't. Just
Having some technical issues here.
I've muted. If we could just get everybody to keep muted, that would be great. If you have a question, then let us know.
Okay. The other reason, you're able to receive dividends as a shareholder. Now, depending on what time period of life you're in, as to whether you should receive dividends or take a salary, the answer is it depends. Because when you receive dividends, it's treated as investment income as opposed to earned income. So, and this I put in here just for Jenny because I thought she would like it. Should you start a corporation? Probably not. Not right off the start. The drawback, if you just started a corporation instead of doing it as a sole proprietorship or partnership, you give up any personal losses against your regular income. And for most people, when you start a business, it's typically run as a sideline while you still have your regular job. And then as your business grows and grows, you'll move into your business full time. Now, did anyone walk away from their career and start their business full time?
I did.
Okay. Any of our other small businesses, is that how it started, or was it a sideline?
It was kind of moving just from working with more kind of corporate identities or other owned restaurant slash food businesses into owning my own. So still within the same career front, but just going independent.
Yeah. And did you have a regular job when you first started?
Yes, because the food truck was seasonal. So that was
Yeah.
the first business.
Okay.
And Ashley said started on the side and then became full-time.
Yeah, I had a when we first started our tax office, I think we had, I want to say 13 or 15 tax clients the first year, and one bookkeeping client. So I had to keep my my regular job until I became busy enough where I could actually walk away from it. So if you're brand new thinking of starting a business, very, very rarely do I recommend you jump right into a corporate structure. Typically, you're going to have your initial year, you're going to have some startup losses, and you can write that against your earned income from your regular job. But that being said, there are some instances where you need to incorporate right from the start. For example, if you work in an area where you have high liability, right? The one that comes to mind is dealing with international clients, some retail operations, and actually tattoo and beauty parlors have a high instance of liability. So if you're working in an industry where there's an increased likelihood for litigation, you're best to incorporate it as it gives you that separation of personal and business assets, right? So you're going to have that separation between what you own personally and the extent to which the business owns assets. And that's really where incorporated entities came from. They actually started out with shipping merchants in the late 1800s. They wanted to limit their losses, so they would form a corporation and buy a ship. And then if they lost everything, their losses were limited to just the money they had in the deal. Fun little history tidbit. Now, incorporation is not a reason to not have liability insurance. You still need liability insurance. That's very, very important that you don't make that misconception that, oh, if I'm incorporated, I don't need liability insurance. No, you still need that. That is still a very, very important piece of your business. Okay? You guys have any questions regarding liability?
Can I ask where you suggest one might look for some decent liability insurance if they're not incorporated?
Zen Insurance.
ZEN?
Yeah. They're under, I know when I first looked at them, I was very skeptical because it was like an online provider, but they're actually underwritten by Lloyd's of London, which is a huge insurance company. And that's who I use.
Thank you.
So yeah, you'll get liability, errors and omissions. They're comparable and they're very easy to work with. So that's what I would recommend.
I did have a question. So I own both a sole proprietorship and a corporation. The newest business being the cafe is under a corporation, as where I still have my Postal Pizzas food truck as a sole proprietorship.
Okay.
So within the liability structure, would there ever be ability for it to be like, when you talked about the suable aspect or like the getting written into a like a claim necessarily, like if something happened at the cafe, because I'm 100% owner of the corporation and obviously 100% owner of the food truck as well. Is there a blurred line there or is it very distinguished?
Well, they're two separate entities, but because your food truck is under your sole proprietorship,
Correct.
the corporation is actually an asset that you own, right? So that from the food truck, it opens it up into your restaurant.
Okay, so it's kind of like a check valve, like only goes one way.
Yep.
Okay.
Right. From the restaurant can't go after your food truck, but from the food truck can go after your restaurant.
Okay, because I am the owner of it.
That is correct. And it's an asset that you own personally.
Okay, so the corporation, okay, that makes sense.
Yeah, this is where people get into operating and hold opcos and holdcos, but that's in my fun facts at the end.
Okay, so maybe hold off on my next line of questioning then.
Yeah, I can see where you're headed.
Okay, I'll just hold off for now. Thank you.
Yeah, no problem. Okay, so lasting existence, and this is something that as we get older, and I'm bridging in on my 40s here, you start to think about legacies and enduring businesses, and what happens with my business at the end. What do I want to do with it? Do I want to sell it? Do I want to give it to my kids? Do I just want it to function on its own and sell the shares to someone? So this is where you'll get lasting existence of a corporate structure, right? So I can be dead and gone, and my tax and accounting firm can still be running, under new management, and my children can be the shareholders, and it just continues on, right? So this is where you'll get the generational business. What we're finding now is a lot of the baby boomers are retiring, especially in the farming industry. We're going to have a big changeover probably in the next 10 to 15 years of businesses from one generation to the next. And a corporation is a way for you to transfer those assets a little easier. I would say a little easier, because even sometimes it can get pretty messy. Okay, so the lasting existence is just kind of, it's a small portion of the corporate structure, but it still is very important to some people. All right, this is what everyone likes: tax savings. So your average corporate tax rate, depending on where you're working and what kind of income you have, you're going to round about that 15% of net. And the average personal tax rate is roughly around the 30% mark. Right. So if you don't, you're gonna save 15% on average. Now every situation is different. Depends what other income you have. Depends how much income your business is earning. But this is another big reason is a lot of people want to jump right to a corporation, as they figure they're going to save a whole bunch of money on their income tax. And yes, but to incorporate just to save money on income tax it'd have to be a pretty significant income. And I have some kind of cutoff numbers that I use when I work with my clients when we get to the point where we need to move them from a sole proprietor or partnership into a corporate structure. So this next slide.
Sorry, before you go on to that next slide, are you able to share what that threshold that you generally use? I know it's very different for every person and every situation, but because there is a cost to incorporating as well too. So is there a point that you feel as though financially you wouldn't suggest somebody incorporate until they're at least making X number of dollars?
Yes, I do have that later in the presentation.
Oh, perfect. We'll wait.
Yeah, no, that's a good question to have though, right? Because everyone is like, oh, I want to save money on taxes, but am I actually going to save anything when I'm all done? So there is a downside to incorporating, right? So what are the drawbacks? Setting up a corporation can be expensive compared to your sole proprietorship. I mean, you can be out the door and running for a sole proprietorship for less than you need a name search and registration. I think you're going to be at about $110. and you're up and running, right? Versus filing your ISC fees. The fees alone just to file a corporation is $315. The additional paperwork involved, at a minimum, you're looking at $1,200 just to set up a corporation. And that's a pretty basic one with no rollover assets, no complicated structure. It's like a very basic, two shares, and you're out the door. Ongoing maintenance and accounting, you're looking at between a business return and an incorporated structure, you're probably going to be 4 to 5 times as expensive, unless you're doing your own tax filing. And if you are, kudos to you. The jump from sole proprietorship to corporate T2 is pretty complicated. There's a lot more line items, and it is a lot more complex tax return to do, but still very doable if you take your time and go through it. Does anyone know what a minute book is? Except for you two that are already incorporated, you don't get to answer that question because you should know what a minute book is.
Had my hand up, but now you won't let me talk.
Yeah, no, you don't get to talk because it's cheating.
Does it have something to do with like the structure of your corporation, or is that different?
No, it'll be contained within your minute book. Yeah, you're pretty much all right. Jenny, tell us what a minute book is.
As a corporation, we're supposed to have regular meetings, and that's all kept in your minute book. I know even if we go to borrow as a corporation, we're to have like a resolution that we are allowed to borrow. Is that kind of it keeps track of everything that you're doing as a corporation, and you have to have regular meetings. You're supposed to have an annual meeting, and yeah, there's all those good things.
Yeah, you have an AGM, your regular meetings. You need to vote on, we're going to pay a dividend. Class A is paying out $100 a share this year, right? So you need a resolution, and that has to go in there. It's basically your minute book is the records of everything that's occurred within your corporation from a governance standpoint. So as your corporation grows and you take on more shareholders, or you have more and more income, right? We need to borrow, like Jenny said. The first thing that a banking or any kind of financial institution is going to ask for is, well, give us your last 2 years of T2 returns and your minute book, right? They want to know who the shareholders are, and this will have your share registry, your share certificates. Everything is contained within that minute book. And that's another thing that has to be maintained and has to be kept up. Otherwise, it's pretty significant fines if your minute book's not up to date.
So is that also is that similar to your annual corporate maintenance? Is that kind of like would be in that same term, or?
You mean the ISC submission?
Yeah, potentially. I think I'm just referring to, I've just recently found out through the lawyer that helped set up my corporation, that he sent me a lovely invoice that I didn't know there was going to be an annual thing, as far as it's like listed as the annual corporate maintenance. And then within that is kind of the statement of account, along with like the annual resolutions and like signatures for all those documents and whatnot. So is that something that needs to get done by a lawyer every year?
The answer is no, it does not necessarily need to be done by a lawyer. It has to be done every year. Your ISC filing is your annual filing to our governing body. And you do have to take that resolution, put it in your minute book. Sounds like you're being billed for your ongoing maintenance for your corporation. So they should be maintaining your minute book, whether it's physical or digital. It can be one or the other. I prefer a physical minute book for our clients. We do have everything as a digital copy in a cloud, but we also have a physical binder where we keep all those kinds of things. So yeah, that's probably your annual billing for your minute book.
Okay, so within the minute book, obviously you made a couple of examples of those meetings and paying out dividends and whatnot.
Yep.
So within that, you'd also probably have like your annual returns, and like what else would it be accompanied in that as like a package?
Your corporate T2 return, like your tax return, doesn't have to be within the minute book.
Okay.
But you'll need a resolution to pay your income tax, right? So that'll be in there. Shareholder updates. Yeah, any resolutions passed by the board. Like Jenny said, you're supposed to have regular board meetings, so we'll have an annual general meeting, and then you might have quarterly, depending on how your structure is set up. Most are just an annual general. But those are the kinds of things that'll be in there. Your share should be in there, your share register, as to who owns what share of what class and what that class means, as well as all your initial incorporation documents will be in that minute book.
Right. And all of this is still relevant even if you're just one sole person within it.
Yes.
Okay.
Because, and this is later in the presentation, but if CRA asks to see your minute book and you tell them you don't have one, it's a $5,000 fine.
Okay.
Which I find out when I was researching to do this presentation. The fine in Ontario is up to $25,000, or you get a year in prison.
For not having an up-to-date one.
Yeah, for not having an up-to-date minute book, which I thought was a little aggressive, but they take this very seriously.
Okay.
So,
and sorry, one more question before you continue on. As far as your general understanding in the services you provide, is that in or around the range of $500 annually, or would it be less? As far as an expense for a body, specifically in this aspect of professional corporation law, doing that work?
Well, your ISC fee is like $60 a year. So the remainder, like they do have to generate the documents and you do have to sign them. I don't know. Lawyers are expensive at an hourly rate.
Yeah, for sure. I think I just didn't even really fully consider this as a, I thought incorporating outside of your obviously tax filing and whatnot was a one-time type thing.
Yeah, no, it's an annual thing every year.
Yeah. Okay, I'll save the rest for later. Thank you.
You're welcome. Okay, so this is what people want to get into is, when do I incorporate, right? And the answer is it depends, right? And this is what I use with my clients. What I do is I will run their tax return both ways, sole proprietorship versus a corporate structure. The income threshold that I use is $100,000 in net business earnings. And I'll go through this. So the first two, the line item and then sole proprietor. Okay, so as a sole proprietor, say you made $100,000. You go to file your income tax. Yep. After Trevor's deducted all my expenses and we've written off everything we possibly could, our net income's $100,000 even. On that $100,000, by the time you pay your CPP, your federal tax, and your provincial taxes, you're going to give a little over $30,000 to the government. Your net personal income will end up being $59,768. Now, that same business held within a corporate structure, $100,000 net income after we've expensed everything, your corporate tax payable on that's going to be $9,000. And then what I did was I took a dividend of $69,500. On that, you're going to pay personal tax of $9,442. So then if I add together what the corporation has paid in income tax and what you're going to pay in income tax, you end up with about $11,000, $11,790 in tax savings, and you end up with $290 more in your pocket personally. And I actually ran both tax returns last week when I revamped this presentation. So purely from a numbers perspective, even after you include the $500 a year to pay your lawyer to update your minute book, and you're paying $2,000 to have your business taxes done, you're still about $10,000 ahead, right? And can anyone tell me something that's missing from this?
Your CPP.
Yes, you would not contribute to CPP because investment income isn't subject to CPP. So that's something you have to keep in mind, is that once you move to a corporate structure and you no longer take a salary, you have to invest for your retirement on your own. But with an incorporated structure, you do have the $1 million capital gains exemption under the sale of qualified business. So that's something you can use in retirement. But no, there's one other thing missing out of this.
Well, I don't see in there that you've taken into consideration the difference that you pay somebody like you to do the work in the incorporation compared to personal.
Yeah, that's even if that between that and the minute book, you're looking at maybe $2,000. The piece that's missing is you have a remaining capital of $21,500 of after-tax money sitting in the corporation. Right? So you still paid yourself the same amount every year, right? You have the same amount of money in your pocket personally, but your corporation also has an additional $21,000 of remaining capital left. So that's where you really start to see the benefits of moving to a corporate structure is, yes, you'll pay less personal income tax, and that's great. I will say that if you're drawing more and more dividends, your tax rate will go up. You'll never pay the same amount of income tax as if you earn the money personally, because you're not paying for that CPP portion. And investment income is taxed preferentially because that's what dividends are. Technically, they're investment income.
Ashley has a question here, Trevor, and said, would that be taxed? So she's referring to the remaining capital.
Nope, because your net income was $100,000. The corporation pays their corporate income tax, and this dividend that's paid out is paid out with after-tax dollars. Right, so that remaining $21,500 is after-tax capital sitting in the business. Right, so you can use it. You want to reinvest in the business. You want to bring on an employee. You have that extra capital sitting there. And this is where I find most of my clients get the benefit from is they actually have money left in their corporation to expand, put money into training. If you have employees, maybe you want to move to getting them benefits. You can pay your employees a little bit more. You can, expand whatever your corporation needs. We just did a big upgrade with our equipment when I bought new laptops and actually blinds for my office. One was really good. That's why I'm working in the spare office because mine's being renovated. So does anyone have any questions regarding the tax implications when we move from a sole proprietorship to a corporate structure?
So there's two questions here.
Yep.
One is carry for, so again, referring to that remaining capital. So does that carry forward as a cash asset into the following year?
Yes.
The next question is, can you buy property?
Yes. Corporations can buy property. They can do everything a person can do. They're not allowed to vote.
So you
That's
can
it.
use the remaining capital to purchase property?
Yes.
Is the remaining capital, is that a shareholder loan? Like what, can you explain that shareholder loan? What is that? Is that the same thing?
Nope. Shareholder loan is when you loan money to the corporation personally. This
Okay.
remaining capital is an amount that wasn't paid out. So what I did when I did the
Right.
calculation, I'll just go back here. I worked it backwards. So I started with, I knew I wanted to put roughly $60,000 in my pocket personally. So I figured out how much of a dividend do I need to take in order to get 60 grand into my pocket. And this is the number I came up with. So that 21,000 is money that was left in the corporation, right?
Right. Okay.
So that's, basically it's just sitting in the corporate account. You can pay it to yourself if you wanted to and take more personal income. But what I was trying to achieve was a net result of the same amount.
So if you were to buy property with the remaining capital, it would have to be commercial property. It couldn't be a personal
No.
property. Okay.
What do you mean a personal property?
I don't
Like-
know.
You want to buy a cabin?
Yeah.
Then the corporation owns a cabin,
Okay.
right? So then where you'll get into trouble, and I will do this as a caveat, is if you're ever to get audited and the government says, all right, what is this property here at, Elk Ridge Estates? What's that? Oh, that's our cabin that the company bought. Okay, how is it used in the business? Oh, it's not. I just like to go there. Then you have what's considered a taxable benefit that has to be reported on your T4. That's where people get into trouble. But no, it doesn't necessarily have to be a commercial property. I mean, you could buy residential real estate on spec, assuming the market's going to increase. You could use it to flip houses. You could buy rental properties, whatever you want on it.
So with that remaining capital of 21.5,
Yep.
you had used putting 69, or what was it on the other screen? 60,000 roughly is what you wanted to remain in your pocket there.
Yep.
And those numbers are starting with a net income of 100,000, which gave you, like you said, the remaining 21.5. Using that 21,000 as like a simplified threshold of what would make sense financially to incorporate, could you then technically reduce that so-called threshold from 100,000 to 80,000 and have it be a wash and not have that remaining 21.5 left over and still make it viable to incorporate financially?
Yeah, you can. I use 100 grand because it's a nice round number that everyone seems to want to shoot for.
Okay.
The reality is, yeah, at 80 grand. So if we use 80,000 and you pay out everything in dividends and you have no remaining capital left, you're still roughly $10,000 ahead, right? If you added on, say you added on 2 grand for the additional accounting costs and the maintenance of your minute book, you're still ahead by 10 grand if you're only at $80,000 income.
Okay. Thank you.
You're welcome.
There's one more question, Trevor, before you move on. It
Yes,
is,
sir.
can you pay your loans off with the remaining capital?
Is the loan for the business? You can, I mean, yes, if the company owes money, you can pay out your loans if you have remaining money left over. Of course you can, yeah, for sure. This is where people you make balloon payments on anything you can, right? Especially if it's a property you have a mortgage on. Typically, you're allowed 10% as a balloon payment once a year. Okay. Does anyone have any other questions about this?
At the moment,
No.
it looks good. I think you've
Looks
answered
good.
so far.
I think we're
Okay.
going to have part 2 very soon.
Yeah, I'm really glad I cut it down from 60 slides to 20. Okay, so what changes? And this is where people that have run a sole proprietorship, I find they get into this bad habit of I don't have to explain where the money went. I'll just pay personal tax on it. You have to explain where all the money went, right? At the end of the year, you will have to balance your assets. They have to equal the liabilities and the shareholders' equity. And part of the shareholder equity calculation is the dividends you've taken, which becomes even more complicated when we get into common mistakes. So you're allowed to roll business assets over into a corporation as a shareholder loan at the book value. That's what BV means. Although, if you use the immediate expensing program that the government had on during COVID, it ended December 31st of 2023. This could cause a capital cost allowance recapture, which basically becomes a math problem where you have to work out what it's actually worth, pay your CCA recapture if you're selling it to the business. Alternatively, you can lease it, but then you have to lease it at market rate, and it's just another thing to keep track of. Section 85 rollovers, they exist when you want to transfer real property into a corporation in exchange for shares. That I do not recommend you do on your own. I recommend you get detailed professional advice with using Section 85 because it is a useful tool, but has to be used correctly. Now, when we get into common mistakes, not having a minute book, it's a $5,000 fine. Late filing of your T5 dividend slips, those got to be in by the end of February. So you have to have figured out what you drew from your company from January 1st to December 31st by the end of February and file your T5 slips. Otherwise, it's a $100 fine per slip. The other thing with corporations is what's called the 6-month filing rule. So you have 6 months from your year end to file, although you only have 90 days from your year end to pay your amount owing. Now, you can choose your year end whenever you want, but you can only kind of make that choice once. Moving your year end around after your first year is very difficult, and you have to have pretty significant justification. A lot of people like December 31st year end. I'm not a fan of a December 31st corporate year end because it limits your ability to split income from one year to another. Yeah, June is good. I like June year ends, but it really what you want to have is, especially if you're in a retail operation, you want to have your year end during your slow time of year because you're going to have to count all your inventory. The other common mistake I've seen is all shareholders have the same class of shares. Where this gets you into trouble is if you have the same class of share, then everyone has to receive the same dividend based on the number of shares they own. Versus if you have A, B, C, and D class, you can pay dividends to each shareholder separately for separate amounts, right? It doesn't have to be all the same. Now, we're going to talk about dividends and share classes. So shareholders are entitled to receive dividends based on their class of shares. Dividend resolutions are voted on by the board. There are two types of shares, common and preferred shares. And where that makes a difference is Some will have voting rights and some won't have voting rights. And then when you go to dissolve the corporation, if pref shares have accumulated unpaid dividends, they get paid out first before it's dissolved. But really, for most small incorporated businesses, you're not going to run into that issue. Dividends are great. They're treated tax preferentially. The only thing is you no longer contribute to CPP. So especially if you are on the younger side of the spectrum, you really need to think very carefully as to, okay, so I'm not paying into CPP. I need to invest for my future. You need to have retirement plan somehow. I don't do retirement investing. That's not my bag of tricks. I recommend you reach out to someone who works in that area. That's their bag. Does anyone have questions regarding dividends and share classes?
I don't have any questions. I just have a comment. I know when I was incorporating and working with my lawyer, like I've been divorced before, and so it was a case of you have to think about who you're, adding as your shareholders with you. Just because if you do end up getting divorced, it makes things very complicated on how to navigate that.
Yep, and especially if you're if you have a partner, and especially if it's two couples, right? And everyone has equal shares, but then one couple's getting divorced. Typically, when I've done these corporate setups, you put a clause in there that is like first right of refusal, basically. So if they are going to sell the shares, they have to offer them first to the other shareholders before they could sell them on the open market, essentially. That can get you into trouble both ways, because if you end up having a fairly valuable corporation, then you're paying out money that you weren't intending to pay out in order to maintain control. So yeah, you're very right. You got to be very careful when you set this up as to who is the shareholder. I've seen some setups where there's, they got 20 different types of shares and every child has a different class, or they have a common class and a preferred class, and it is very complicated. Sometimes I feel like these are set up to be complicated as make work projects, but that's my personal opinion. All right. Does anyone know the difference between corporation, incorporated company, limited, corp, Inc., or LTD?
They all come with a different name.
Yeah, that's a question we get a lot of. They're like, what does the suffix mean? I said, it's whatever your preference is. It makes no difference as to how the corporation actually is structured. Right? It's how your name, that's how you want the name to be, right? Because it's like, oh, the Jessica Corporation, or, Prairie Paget Tax and Accounting Limited, or LT. I think we're LTD. We're not limited. LTD is ours. Now, this last piece I'm going to talk about here is what is a holding company? Who's heard of a holding company?
Yeah.
I have, but I don't know what it is.
Okay, so this gets thrown around a lot, and I've had some clients come in to me and say, "Oh, I want to set up. I want an operating company, and I want a holding company, and we're gonna shuffle things around here." And I don't know if it's they've spent too much time up late on the internet or how people get these ideas, but basically, a true holding company is purely for investments, right? It has very minimal transactions. It has, it can't have credit cards. It can't be an operating company, right? Now, where the benefits of having an opco and a holdco is typically once you've been incorporated for some time, you've built up significant assets, and now you're looking to, okay, we want to, separate off some of these passive assets that we've obtained. Say you've used your leftover capital to buy vacant land for development, but your operating company really doesn't want to develop it. So this is where a holding company comes in. So holding companies basically own shares of other businesses. You can use what's called an intercorporate dividend to pay a dividend tax-free from one company to the other. Now, the income tax still has to be paid on that money, but it's only paid by the first corporation. It doesn't count as income for the holding company. So you can use it to accumulate capital for other investment projects. Often what you'll hear is you have to purify your operating company. And all that is it means that you're moving any kind of passive asset out of an operating company into a holding company so you can use the lifetime capital gains exemption. Basically, what it comes down to is that when you're ready to retire and you want to sell off your business, but you don't want to sell off some of the assets that you've acquired, you move the assets to a holding company. Make sure that 90% of everything within your operating company is used to run the business, sell it off, and then claim the lifetime capital gains exemption. And that's how you retire, just like that. Now, if you need help, and if you have any questions that you don't feel comfortable asking on a recorded presentation through Sage Hill, by all means, you can call our office line or send me an email. I'm happy to answer any questions. I don't bill for that kind of stuff because I was a small business owner too. And sometimes you just need a little help and maybe a little advice to get you pointed in the right direction. And that's it. Look at that. 54 minutes and 15 seconds.
Awesome. I have a few comments in the chat. I'm just going to read to you. So from
Sure.
Ashley, she said, First Nations have these set up as a monthly function, motherly function. Let's go borrow from mom kind of view. Okay. And then we have another, what is the disadvantage of a holding company?
It's complicated and expensive. I use one, but I file all my own stuff, so it doesn't cost me very much money. Right. That being said, it took us a couple of years to get to the point where we needed one.
Perfect. Does anybody else have any questions? This has been very informative.
Mm-hmm.
I think I need to update my minute book.
Mm-hmm.
I'm guilty. Don't.
I have a question. Is there, and I think the answer is no, is there any sort of middle ground between a sole proprietor and an incorporation?
Like as far as a business structure?
Yeah. As far as, benefits like tax breaks and limiting liability and things, is there a middle ground anywhere?
Nope. You're kind of column A or column B. Because even if you're in a partnership situation, it's still either a sole proprietorship or it's a joint venture through a corporation.
Okay. Thanks.
The thing you're going to want to, what I would do, I would get my personal taxes and then pull the business income out and work out what my corporate taxes would be. See the difference in tax savings even after you add in the extra costs and see if it's worthwhile. Sounds like you're kind of on the cusp as to whether or not you should move to a corporate structure, Ange.
Yeah, sounds great. Thank you for that.
You're welcome.
The one question that I had, so my sole proprietorship has higher income on a year-to-year date than my corporation.
Okay.
Would it be beneficial to have the sole proprietorship be incorporated underneath the corporation which the other business is under? Or would it take an analysis to figure out if that would be beneficial? And the main reason for the corporation being created was that we are a shared space with another business. So there was higher liability aspects. So I'd say liability was like the number one consideration in the structure and the opening of the corporation.
I would probably, once your sole proprietorship is established and you got solid cash flow, I would sell it to the corporation, take a shareholder loan, pay yourself back that way. That'd be my recommendation. Or you could roll it over in exchange for shares, but you're probably going to want cash out. So yeah, I would roll it under the corporation.
Yeah, so that would also be beneficial because technically right now the sole proprietorship, aka myself, made a shareholder investment to the corporation in order for it to become operational with that other business.
Yeah.
So would that just increase how much the corporation owes me if I sold it to it?
That would be correct. There is a GST form you're going to have to file because you're both going to be GST registrants. So the assets will transfer exempt. Just something you're going to have to look after, so you don't got to pay 5% to collect it, remit it, then claim it back. It's just a workaround.
Right. Yep. Okay. So then within that, all the earnings, both for the previous sole proprietorship and so both businesses' earnings would be under the same umbrella. So then, then I would need to be able to structure the repayment of that loan.
Yeah.
Because technically, go ahead.
Yeah, what I would do is you can, whatever you draw in a year, say you drew 60 grand in a year, take $40,000 as dividend because you'll be under your minimum income threshold, and then take the other $20,000 as repayment of your shareholder loan. You get 60 grand out. You have a fairly minimal personal income tax liability, and you're able to draw down that loan versus just taking the full 60 against your right. Draw it down over several years. It's the most tax advantageous way to do that. That being said, if when you started your sole proprietorship, you use that immediate expensing program and you've depreciated your business assets to nothing, you're going to have a recapture.
Right. Okay. That I don't know 100% off by hand. So
it'll be in your personal tax return under CC8 schedule. I think it's Schedule 8, but it'll be in there.
Okay. And then is that something that could be done at any point, or it's better off doing it sooner than later to structure to be paid off over a period of time versus it? Or
you can, I mean, you can do it at any time. You're concerned about the loan repayment amount?
Yeah, exactly.
Yeah, no, you can. I would map it out. Typically what I've done is I've always split out what you're gonna take as a dividend, and then what you're going to take as shareholder loan. Just work it out so you pay very minimal income tax. I want to say 36,000 last year was the threshold, but again, that's off the top of my head. So yeah, work out what you're going to take as a dividend, and then whatever else was pulled out of the corporation, draw it against your shareholder loan to draw it down.
36,000 was the what was that in reference to? Sorry.
So personal taxes, I want to say it was $36,000 in dividend income before you started to pay any income tax on it.
Right.
But again, that's, are you married? Are you single? Do you have kids? All those things come into play. It's a fun little math game.
Yeah. Single, non-married, and don't have kids.
Right on.
This has been great. Sorry to interrupt. In closing, I think someone had asked if we would share Trevor's contact information. We usually send the video out and the contact information, so we'll make sure everybody gets that.
Mhm.
Thanks, Trevor. This has been a world of, very good information. And as Jessica said, I think we can always maybe do a part 2 here. This has been wonderful.
Mhm.
Thanks, everybody.
Thank you
Have a-
very much.
Have a wonderful afternoon. And thanks,
Welcome.
Trevor. We are back. Our next one is a marketing one, looking at e-newsletters. So we take a little different swing next month or next week or 2 weeks. But
Yeah.
anyway, have a great day, everybody.
Yeah, thanks.
Thank you. Trevor, how many slides did you not go through?
No, I went through all of them.
Oh, awesome. Okay, well then we're good. I just thought if